Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, we really failed to build on yesterday's gains, right? We had started the week on a very strong note, and we were hoping to achieve that 25,200 and mark and close above that level. Although we did hit that level at open, but we really fizzled out from the opening highs, and just about managed to hold on to that 25,000 mark. So although it was a choppy session, we saw both the benchmark indices end the day in the red, but mid-caps, that's where all the action was. Mid-cap index and small-cap index, both of them, managed to clock good gains. Although mid-cap index also was a little iffy, Yatin, but small-cap index was fairly strong, 1% gain coming in there. The Nifty bank index also was fairly volatile, but managed to end the day in the green. And if you look at the advance decline ratio, it was 1:1 once again, as has been the case over the last few sessions. But today the breath was tilted slightly in favor of losers. Let's talk about the sectors then. Autos were among the big drags. Metals, of course, extended their losses. Pharma as well among the laggard. But on the flip side, you had Realty. That index was up somewhere around 2% or thereabouts. FMCG also did well today, and banks, as I mentioned, were among sectoral gainers. Look at the key movers on the indices, on the index rather. BPCL, of course, among top gainers, given the fact that crude Brent has fallen to $75 per barrel mark once again. And because of that, you saw a lot of action in some of these OMCs. So BPCL, HPCL, all of them gaining in trade. ICICI Bank from the banking pack did well. Britannia from the FMCG pack did well. Nestle reports earnings later this week. So, FMCG pack doing well ahead of that. Airtel among gainers, and Asian Paints, being a crude derivative, was among gainers as well. What didn't do well was HDFC Life. Numbers came out in the second half. Bajaj Auto, remember the company reports its earnings tomorrow. Ahead of that, some bit of weakness. Bajaj Finance was also among losers. Wipro, yesterday, of course, it rallied on the back of expectations of bonus issue, but today among losers. Reliance Industries, although profits beat expectations, Yatin, the stock was under pressure today, and Hindalco from the metal pack was among the laggards. But Yatin, lots of movers, and brokerage stocks like Angel One and MOSL, those were among the gainers from the broader.
Clearly, brokerage stocks, Angel One, Motilal Oswal, JM Finance, all of them flying in trade. Obviously, the reason was the Q2 number strength of Angel, which was quite good. In fact, the stock opened with a 7-8% gap up, ended the day higher by about 19%. So good move coming in for Angel One post that quarterly numbers. We also have stocks like Motilal Oswal gaining 12%, and stocks like Vijay Diagnostics, 5-star Finance moving higher in trade. In fact, 5-star Finance saw some block deals in trade today. Post with the shares rallied almost 8.5%. 1 crore shares traded on NSE, clearly signifying that block deal happening there. What was not doing well is Oil India, and as Nandita was mentioning in the opening comments, that crude oil prices continue to languish, post which some profit taking in Oil India. HDFC Life post the numbers failed to cheer the street because the margin trajectory of the new business was much lower than the guidance itself. The shares fell 3.5%. Nalco profit taking there 3.5% down for that stock as well. And big boy Reliance Industries post the numbers declined by nearly 2 percentage points.
Okay, that was about the broader end of the markets and all the movers and shakers in today's session. Of course, the big mover in today's session was Angel One, which also had an impact on other brokerage stocks, which also rallied quite a bit. So Angel One, as Yatin was pointed out, 19% gains coming in. Solid set of numbers in the second quarter, and it continued to report healthy performance on the back of strong client addition. And of course, there has been a boom in the Indian stock markets and increase in demat accounts as well. So all of these factors boding well, and there has been an increase in client funding book as well. So all these factors led to a strong show in the second quarter. Number of orders also increased, led by improvement in the cash segment. Let's take a look at the profit that was up almost 40%. Revenues also grew in excess of 44%. Margins, 44.4% vis-a-vis 42.3%. So over 250 basis point improvement in margins on a YY basis. Trade, as I mentioned, there has been a boom in stock markets, and trading activity has been bustling, and because of that, the numbers are pretty much solid. And share in total demat accounts for Angel 1 rose to 15.7% vis-a-vis 13.2% on a YY basis. Remember, it competes with other discount brokerages like Zero, Daha, Upstocks, and the likes. And, it has, of course, gained share when it comes to demat accounts. And total client base also increased by as much as 60% on a YOY basis. The gross client acquisition, which was extremely strong, jumped over 40%. And the number of orders placed in the second quarter on this platform also grew by 44.5%. So management has said that it has witnessed an improvement in market share across segments. And, back in July, there was a SEBI order where they had they were directed to charge all members uniformly rather than providing discounts based on their trading volumes. So that took a toll on the stock price. The stock plummeted quite a bit at that point of time, but from July lows the stock has recovered over 50%, Yatin.
Yes.
So there has been a very good recovery in stock price as well. Motilal Oswal has a buy rating on the stock, target price at 3,300 rupees. It says that the strong growth in the gross broking revenue was led by strength in F&O segment, cash segment, and also in the commodity segment. Aside of that, there will be impact of the new F&O regulations as well. Of course, the margin requirement will go up, and of course, number of weekly expiry for NSE contracts will also be one, right, per week. So all these things will impact volumes, but Angel One, of course, will decide on its pricing action and, of course, on how to mitigate the impact of these measures. But aside of that, another important thing that, I was just going through is that the diversification into distribution of loans, that will be an important growth strategy for Angel One. But for today, almost a 20% uptick on the stock. And, looks like the going will be good, but of course, it will also depend on how it decides its pricing actions in light of the new SEBI rules in terms of.
And I think most of the investors are looking for that in the conference call. I think more clarity will come in. But yes, the share price, as you're mentioning, from the lows has risen, and today also a good 18.5% move coming in. But moving from brokerage stocks to auto ancillaries, and today UBS has come out with a new report on RK Forgings. This UBS initiating coverage note has a buy rating on RK Forgings with a target of 1,500 rupees per share. From the current market price, this implies almost a 40% plus kind of a return expectation. UBS believes that the company will benefit from the penetration of electric vehicles as well as aluminium forgings. Now, if you look at the electric vehicles, RK Forging has been working on various electric vehicle projects and to enhance offerings to the EV segment. Not only that, the rising contribution from Multitech Auto and JMT Auto, which are the recent acquisitions, those are getting consolidated. And once the consolidation gets over, the synergies, the benefits, the margin expansion, the scale that a company like RK Forging gets would clearly boost earnings according to UBS. In fact, UBS expects a revenue compounded annual growth rate of nearly 22% for the next 2 financial years. And also, if you look at the consensus, that is at a 17% CAGR. So, UB is expecting better growth versus its peers, and obviously the electric vehicle story is yet to unfold according to the management as well as the recent announcement that the company has made to the stock exchanges.
All right, that was about RK Forgings initiation coming in by UBS, but let's also talk about a sector that I like. Of course, because I like movies. PVR, reported numbers today. On the face of it, it will look like a flop show if you compare it with last year. But on a quarter-on-quarter basis, the performance has been good. Let me just take you through the numbers first. There has been a net loss at 11.8 crore rupees vis-a-vis a profit of 166 crore rupees on a YY basis, same quarter last year. Revenues are down 19% on a YY basis. EBITDA is down 32%. Margin at 29.5% vis-a-vis 35.5%. But of course, if you compare it with the last quarter, you will see that the losses have been narrowed, and it has reported a 40% jump in its box office collections in the second quarter compared to the first quarter. There has been a significant uptick in audience turnout as well. You had movies like Stree doing very well. You had some old movies being re-released, and that was a major draw for cinema goers as well. And Kalki also, that released at the end of the first quarter, continued to do well, in this quarter as well, and it had a spillover effect as well. So, things working well. On the international front as well, you had the much anticipated Deadpool and Wolverine. That was the, most well-performing R-rated movies globally. Aside of that, even regional movies like Goat, contributed to the box office collections and strong box office performance. And as I mentioned, there were movies like Veer Zara, evergreen movies, so to say, Veer Zara, Rehna Hai Tere Dil Mein. So these were also re-released and they were quite a big draw for movie goers. But, aside of that, there was the National Cinema Day also that was celebrated on the 20th of September. And, over 1 million guests, visited PVR Inox theatres. And, that was also a big draw. And aside of that, if you look at the movie lineup, extremely strong. You have Singham again, Diwali releases. You have Bhool Bhulaiya 3, Kartik Aaryan, and all these Kareena Kapoor, Ajay Devgan movies. They tend to draw audiences to theatres, right? So those are some of the movies to watch out for. But the most important one will be Pushpa, that would release in December. So third quarter movie pipeline looks very strong. They have already reduced losses on a quarter-on-quarter basis. Going forward in the next quarter, they could further narrow down their losses, and they are also committed to their strategy of generating cash flows, reducing their debt, and even in an interaction with CNBC TV 18, Ajay Bijli, he has said that they will be opening some food courts, with Devyani International. So F&B will also be in focus. So
I think another thing that the management said was they'll shut the non-profitable screens.
Yeah.
I think they are consolidating themselves, and a lot of properties probably they will be reverse leasing. So I think management is now trying to focus on profitability because post-COVID, I think the overall earnings volatility for Bollywood movies as such, the box office and hence PVR, has stayed quite volatile. So yes, as you're mentioning, a lot of initiatives that the management is trying to really boost footfalls, increase the F&B revenues, shut things which are not working for them.
That's true, and OTT still remains a threat, Yatin, right? People like you who don't like to go out much, I think, watch movies on OTT and then these theatres take recourse to such strategies to draw moviegoers to the theatre. But of course, I think those were all the stocks on our radar this afternoon. Tomorrow, of course, the big earning to watch out for will be Bajaj Auto. Of course, we'll get you all the expectations, and we'll also get you all the other stocks that will be in focus on opening bell tomorrow at 9 a.m. So don't forget to tune in for that. But for now, have a great evening and come back refreshed tomorrow morning. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.
Thank you.